Well, thank you for joining us today. Thank you for those of you who are in class, those who are watching online. We're live streaming. I'm just now realizing that probably what you can see from the PowerPoint on your screen is backwards. So unless you can read backwards, let me know, contact me in the chat or email me and I'll send you. I tried a while ago and it didn't flip. But I can send you the presentation so that you've got it. But for the benefit of those of you here, at least you'll be able to see it. But I'm Philip Way. I'm with Way Realty Group. I've been in real estate since 2013. Started inside and was promoted rather quickly on a residential team to be a director of operations. Ended up working a team that was closing 330 plus transactions a year. We uncovered commercial needs in the process and did not have a commercial realtor, so I started doing that part-time. Loved it so much that within 6 months, launched out on my own full-time into commercial. Did that in 2017, and then in 2020 started the Way Realty Group. We've got land specialists and several other commercial specialists on our team, and are building the commercial department here at Keller Williams Cedar Park. So glad to have y'all here, and hope you are eager to learn a few things. Some of this you may already know. We're going to talk about some of the trends, population trends and business trends in the area, and then we're going to spend the bulk of the time looking at return on investment expectations for the different segments, so that you know when someone asks you where they need to invest that money on a commercial deal, you can point them to the direction that is going to be the best payoff based on what they're trying to accomplish and trying to achieve. And then at the end, we'll have time for questions. So put questions in the chat or save them for the end for the question and answer time, and I'll be happy to answer any questions that you've got. But as we begin we're going to look at three things. We're going to look at the Austin MSA and business trends with the growth, population growth, and business growth. We're going to compare residential and commercial leasing specifically with projections for the investor. MSA growth and business trends, some things that we know that, and here's sources. You need to be Inman News, and then of course community impact, businesses that are coming, and things. Our population growth in 2021, 10,288 new residents in 2021. The 5-county Austin MSA gained 264. That's 116 people a day net that were moving into the 5-county area. What's amazing to me there is that Williamson County gained 27,760, and of Williamson County's growth, 16,942, 61% of Williamson County's growth was from Travis County. People moving out of Travis County into Williamson County. So Williamson County, Cedar Park, Round Rock, Georgetown, up to Gerald, out to Liberty Hill. It's just absolutely booming. Lago Vista has seen incredible interest and incredible growth there too. Top states that people are coming from in order: California, Florida, Louisiana, Illinois, Oklahoma, New Mexico, Georgia, and Arizona. So just an interesting hodgepodge of where people are coming from to be able to get here. Business relocations, some of these we know about. We know about Samsung and Tesla, Amazon, of course, opening up distribution centers. It was announced this week that AMD is putting $2.2 billion into a research and development facility now that they're going to build in Hutto. So huge for Hutto. Taylor has got Samsung, of course. Tesla is down south. Pflugerville has Amazon. So now Hutto has got AMD. And the big thing for business here, because of the technology that is moving here, these technology companies, data centers are huge. Data centers, big, huge, cold rooms, kind of like this one, only much, much larger, for servers, for cloud-based storage. And that requires two things: fiber and lots of electricity, lots of power. So we are in an area where we already had several data centers that were up and running, new ones that have just announced that they're coming. Skybox is going to be building a $548 million data center in Pflugerville. Switch is actually going to occupy 1.5 million square feet on the Dell campus in Round Rock. That's amazing because Dell, after they downsized and then went through COVID, had several buildings sitting vacant that weren't being used there in the Round Rock campus. And so Switch is coming and is going to be occupying and using $1.5 million of that, or 1.5 million square feet of that space at the Dell campus. Sabay Data, I think I'm saying that right, I'm not sure, is also looking at building 300,000 square feet. That campus will be at Lewis Henna and 45 in Round Rock. So stuff coming to the suburbs, not just Austin. All of the support for these tech companies are looking at suburbs, places close to the toll roads, close to the interstate, good for transportation, but places where they can be close by, have the fiber, have the power that they need to operate. And of course, it was announced Meta, otherwise known as Facebook, $800 million data center that they have now announced in Temple. If you have not been watching the trends have been growing as the population moves out through Gerald into Temple, out to Belton, out 29, Georgetown, out through Liberty Hill, now to Bertram, Burnett, and all the way to Lampasas. The last 2 land deals I put under contract were in Lampasas. So things are spreading out as things are concentrated in Austin, and as prices are incredibly rapidly increasing in Austin, people are looking to get out a little bit and save a little bit. And so we're seeing the growth and the trends going that direction. One of the other things that we've seen that's been huge are triple net leases. When we talk about leases, and I taught this in my first basics class, a triple net lease for a commercial lease means that you have a base rent rate that the tenant pays. And then on top of that, they also pay the 3 nets, the net expenses for the landlord: property taxes, insurance, and the property management fees. There may also even be on top of that CAM charges, the common area maintenance charges if they are in a condoed area or share space with other tenants. And then of course utilities. So when you're talking with people who are looking to lease commercial space now, you've got to discuss base rent, but you've also got to discuss the triple nets and any other additional expenses on that. Here's why that's dangerous. If you search LoopNet, Crexy, other places to try to find a space for your tenant to lease, and you see the rate, make sure that you read the fine print and that you contact the agent so that you know what the triple net amount is. Otherwise, you will do what I did with one of the first leases that I ever did. I saw, gave me their budget. I found something that met their budget, was information to sign the lease. We found out that with triple net, it was going to be $1,100 over budget. It was going to add that much to their monthly charges are, so that you've got total rent due each month for your tenant so that they don't get shocked or don't get surprised by that. Of course, with a triple net lease, be sure and coach your tenant clients and your landlord clients that so many people are new into commercial leasing. They're not aware that if you have a triple net lease, that needs to be rectified at the end of the year. The landlord needs to go through at the end of each year and look at what was actually paid for taxes, insurance, and management. And if they've overcharged the tenant, they're owed a refund. If they undercharged, the tenant can be sent a bill for that additional. And they can do that yearly, or they can do it at the end of the term of the lease. We had someone who was actually moving out of a space to a new space, and they had never had a reconciliation for their triple net charges the 10 years they had been in the space. They had just always paid what was expected. And of course, what we found out, what we suspected was it was a lot less than that the landlord was paying, and the landlord pocketed it, never did a reconciliation. So coach them to know that the triple nets are an estimate. They will be billed, and it needs to be reconciled at the end of the year, so that they might end up owing a little, or they might get a refund, or it might come out right where it needs to be, just depending on property taxes and those charges. That's the biggest triple net leases right now that we're seeing are national brands, single tenant properties, where it is either a standalone or one tenant in one building, and they are national brands with national credit backing, looking for long-term triple net leases. We just put somebody in a space in Liberty Hill that signed a 5-year lease with 2 5-year renewal options on it. So we're looking at a total of 15 years with the first right to buy if they ever sell the building. So we're looking at longer term leases for bigger clients nationally as leasing is rebounding. Leasing, of course, was devastated by, commercial leasing was devastated by COVID. People realized they could work from home. We're going to talk about that in a minute, about the number of people that have quit and left the workforce and what that's done for the need for commercial space. But as we're looking at things now, office has not rebounded as well as retail. Retail has rebounded. And in fact, when we look at this, your expected cap rates, your capitalization rate, net income from these kinds of properties now ranging 5 to 7%. Little over the last 2 years. But it rebounded so rapidly that Q4 of 2021 was at a 15-year high, and it is still increasing into Q1. We don't have all the numbers from Q1 yet for this year, but a 15-year high for single tenant triple net leases in the Austin MSA. And I think these numbers are probably nationwide as well, but especially more so. Anything we talk about nationwide, multiply it for Austin and for what's going on here. The quitters and commercial space, this was actually an article in the Austin Business Journal this week. They could either work from home or they could find other ways to make money. So many people have quit the workforce that you know this. You're experiencing this when your favorite restaurant has to close early or isn't open certain days of the week because they can't staff it. People are running into, employers are running into all sorts of problems not being able to staff their places. The number of people quitting as a percentage of total employment was a record high, 2.9% December of 2021. We've never seen numbers like this, the number of people quitting. The biggest impact has been in retail and hospitality. What's amazing is retail has rebounded and we're seeing more retail leases, but they're still having difficulty hiring enough employees to manage the business. And of course, hospitality, including restaurants, food services, those kinds of things. We've seen 22% of those quitters have been in that segment. We've also seen that remote work means that the space that's needed by companies has declined by about 20%. As they are downsizing because they don't have the employees working locally now, we thought it was going to be larger than that. Looking at it and kind of forecasting out, we thought there would be more available space, but we're finding out that it's affected about 20%. Those that are downsizing about 20%. So there's still people that have to be in the workplace, things that have to be done, even if people can work from home in certain jobs. But it's still a 20% decline in space needed means that there are a lot of larger spaces sitting vacant. You see this as you drive around town. Every Bell store is empty. They shut down. It's big empty space that's for lease, that's available, and it doesn't seem anybody's moving in. Several other large stores like that, large areas like that. There's one in Lago Vista that I think it's 22,000 square feet of space, and there's not a single tenant in any one of them. And that's been like that for about a year, almost a year and a half. So the larger spaces are sitting vacant for longer. The difficulty there too is that because retail has rebounded, side has rebounded, people with office space are not wanting to lower the rates that they're asking, so they can't get tenants because the tenants don't want to pay a full price. It baffles me how they can have a space vacant for that long and not come down a little to get somebody in the space and then do increases. Looking at leasing, by the way, we talk about when we're writing a commercial lease, one of the benefits of a commercial lease over residential lease is that you increase that base rent a percentage every year of the term. Typically, that was 2.5% to 3%. The last two retail leases I've written last month, 5% increases year over year because landlords are anticipating property taxes to continue to go up, and they're expecting their expenses to go up, and so they're wanting to pad that a little bit. It's still great to counsel your tenants, your tenant clients, to sign a longer term lease and lock these rates in now because they are only going to go up. CBRE estimates that office vacancy will not reach the 30-year average. So we have a 30-year average running. It dipped so far down that it's not going to rebound to average until 2026. So we're still 3.5 years, almost 4 years out from a full rebound. That's nationwide. Austin, I think, is going to rebound faster than that. Rental rates will not reach pre-pandemic levels until Q3 of 2024. But again, my statement there at the bottom, but we're in Austin. The Austin MSA is recovering faster. We're seeing spaces fill out. We're seeing spaces that sat vacant for a while that now have tenants. So it's recovering pretty nicely. I'm going to look now at residential versus commercial projections for the investor, because this is the other big question that we get asked when somebody is, there's a bunch of new people that are wanting to invest in real estate. Everybody understands. Last 60 years, it's the most stable investment you can make when you look at the history of things. So as you look at investing, of course, the first place people's minds usually go to is rental houses. I want to get rental houses. Now, If you want to buy a rental house, good luck finding and buying a rental house. One of my investor clients that has a portfolio of rental properties now, we are buying new build homes. And so it's taking 9 to 12 months for their house purchase to be complete for them to be able to put the house on the market and lease it out. Problem that we're running into now is that new home builder communities won't sell to investors. So I'll just encourage you to get creative. Buy it and have somebody in the family live in it for a little while and then turn around and you can eventually put that on the market. But there are ways to get into it if you can get on a list. Some of these properties, some of these communities, you have to get on a waiting list just for a lot. And then once you've gone through that, then you've got to go through the build. So the question is it worth it to continue focusing on residential properties for rental, single family or 1 to 4 properties for rental income? The difficulty we're seeing is that your price per square foot that you can charge for a lease property based on what you spend for the house, you want to be able to justify that works. Now, neighborhoods in Williamson County, the new build neighborhoods right now, we're seeing, and even some established older neighborhoods, we're seeing $1 to $1.20 a square foot per month for a residential lease. Well, for that to work on a 1,600 to 2,000 square foot house, you need to spend not much more than about $350,000 for that house. Well, how many houses can you find that are 350 or under that you don't have to overpay for and bid multiple offers, all of that? So it's quickly becoming the point that unless you're looking at something super high end where you can really charge rent, you really need to look at the numbers before you decide to buy residential property. Not that you shouldn't, but just be careful that you don't get in to the point that you're not making the money back. The difference between a commercial lease and a residential lease that you have to keep in mind, a residential lease does not have triple nets built in. It's a set rate. They pay rent and the owner pays property taxes and all of those other kinds of things. So they need to understand that there are expenses that come out of that monthly rent. It's not just pay your mortgage off and then pocket the rest. There are going to be other expenses to owning the property. So be sure and coach them. So rent can only go so high or the property just becomes unaffordable. And the question is, can a landlord charge a high enough rent to justify the purchase price? And there you just have to get into the finances and see if it's going to work in the long term. The good news is that property is going to appreciate. And if they buy it, hold on to it for 2 or 3 years, they're probably going to be able to turn around and sell it and make a killing. If they sell it with a tenant in it, even better, because then you're able to charge based off of the rent and not actually the value of the home. So you can play with the math that way to justify buy it. It's always going to appreciate. Got several clients that are buying land that want to develop. It's going to cost too much and take too long for them to develop. So we're just telling them 2 years. Who can tell me? Anybody know off the top of your head why 2 years?
So you get the, you don't have to pay the capital gains.
Capital gains. Yep. If you buy a house and you sell it within 20, if you put somebody in a house and they live there 2 years, they can turn around and sell it after that 2 years without having to worry about the capital gains. Short-term rentals are in demand. We got a request for one of the rentals I've got on the market right now. This morning, people want, because they sell their house and are building a house and have nowhere to go. So we're seeing, in fact, I think the last several requests that we've gotten from tenants applying for rental houses for my clients have all been asking for short-term. The good news is if somebody is going to do short-term, you can actually charge more because it's short-term. And people understand that. They'll pay a little bit more so that they can get into the house and have a place they know they can stay until their home is built. So did you have a question?
Yeah,
Yeah.
I do have a question. We have a client right now that I'm working with that wants to buy an Airbnb.
Mm-hmm.
Have you done that kind of property?
Yes.
So that, of course, that's going to be short-term rental.
Yes.
And so we've been on the hunt for a while. Is what I've been trying to find, and just by my own sense, is trying to find is there a LiveNet type of thing for Airbnb short-term rentals?
No, there are, I would Google it. There are probably a few places that do advertise short-term rental properties that are for sale, but yeah, not many. Most of that, honestly, is going to be learning which neighborhoods allow short-term rentals and then just farming that area to look and wait and see what comes available that then could be converted for that. So, yeah.
He's been near water, so Lago I'm looking
Yep.
at, and little areas of Lakeway, but Some
Yes.
of them actually say it in the MLS listing. They'll
Right.
say this is a great Airbnb
Right.
property or something like that.
And Emily is the lotto expert, so you can probably reach out to her.
She's probably good.
Pick her brain.
Yes.
Yeah.
Okay.
Yeah, she'll be able to tell you. Talk to Emily. She is the queen of Lago.
Yeah.
So, yeah.
It is the queen of Florida.
Absolutely. So the other point there that I had made is that many builders won't sell to investors, and because those short-term rentals are in demand, we're looking at a time now of 9 to 12 months or even longer for new builds to be completed. So again, this is just educating your clients, and part of knowing this information, it's not that this is bad, it's just they need to know this because it's only bad if they don't expect it. So we want to be able to help them set their expectation for what they're looking for and what kind of time frame they're looking for when they're looking at properties. Commercial leasing, when we look there, rents are rising to generate the needed return on investment and for the rising costs. We're seeing that rebound. Office space has not fully rebounded yet. Retail space more than. We're having difficulty finding retail spaces that will work for people who are looking. Again, the triple net passes the expenses onto the tenant, the base rent plus the triple net. And as I mentioned, rents are now increasing 3 to 5% or more year over year. So you want to do the math on that too, just to be sure that you're making a good recommendation. We thought at first, the first landlord that said, I want 5% year over year, my initial reaction was, ooh, I don't know what we're going to get that. People are going to balk at that. They signed right away because they knew that if it's 5% now, it's only going to go up. Give me a 5-year term so we can lock something in that is affordable now because of the trends, because of the way things are going. Again, office space, especially large office space, is still vacant and is slow to fill, but retail's in high demand. And this is what you need to know too. Smaller spaces rent faster than larger spaces. Most of the office rentals that I've done in the last 3 months have all been 1,100 square feet or smaller. People are looking for small offices, small office condos. I run searches every day for several clients that are looking to buy office condos. And if you can buy one of those, 800, 900, 1,000 square foot, you'll turn around. If it's not already leased, you'll have it leased out in no time. The larger buildings too, Camille had one that just sold, 2,500 square feet, could be 2 units, was built to be 1 or 2 units. And that we had lots of interest on, and she had a buyer that took that over. So anything up to about 2,000 square feet, it's moving pretty well. It's in pretty high demand. Lots of people are searching for it. Once you get up 5,000 to 6,000 square feet, unless it's industrial space, it's probably going to sit for a little while. So just coach them to know what's in demand and what isn't. Now I want to spend some time on investment and return expectations by segment. And this information came from a discussion that I had with an investor group a couple of weeks ago. And they came to me and they said, here's how much money we have, and we want to know what kind of return are we going to get if we buy land, or if we buy an office, or if we buy a retail space. What's that going to look like, so that they could go back and decide what's going to be the best spin for them, because they want an immediate return on their money. They want to know how much down, they've got the cash. They want to know how much down will that buy for us, and what kind of a return does that look like. And in doing mine, it breaks out the different segments and what you can expect. Some people like the buy and hold long term. I'm not going to develop it right now, and that's okay. Some people, so where do we look to help meet those expectations? Land, the question is, do you want to buy and hold, or do you want to buy and develop? The question is, if you want to buy land, get in line than I've ever seen. I have done more land deals, and that's 2 years ago, decided to go ahead and become a land specialist because we were getting so many requests for that. Now, 60% of my business the last 6 months has been land, and increasing because everybody wants to buy land. As someone in this office used to say, God's not making any more dirt. There it is, and prices are going up. Jump on it now. If you are going to look at land, you need to look at the flood map. Is it in the floodplain? Because that's going to be critical. There are people who don't know, who are trying to sell large acreages, but 60 or 70% of that is in the floodplain. Well, for commercial use, you can't build on the floodplain. That is just flat surface storage space. Unless you do remediation, FEMA remediation, which is going to cost you 10 or 15 grand, depending on what size the project is. So educate them. There are things you can do to try to remedy it, but floodplain is an issue.
Is it true you can build residential on the floodplain as long as you get the FEMA insurance?
Yes. Okay. Residential will be.
But you can't do commercial.
No. Commercial, you can only do land storage. You can't do a structure unless it's just like covers for the RV parking or something like that. Some places might give you a fit, depending on where it is. Some places might give you a fit with the residential as well, because you're going to have, if you're on septic, that will be an issue. You'd have to put it on sewer. And then the question is, how far is the sewer away to be able to get to the property? And that's actually the biggest holdup on a couple of developments that I know right now, is they're waiting on these cities to get the infrastructure where it needs to be so they can tap into the sewer, because septic won't handle the demand for residential building and development. So do you want to buy it, hold it? Do you want to buy it and develop it? Realizing that there will be no income until it's developed, unless you do a land lease for yard space or for storage, and you got to check the zoning to make sure, and the deed restrictions to make sure that's even required. And then realize that if it's not generating income and you're holding it, you still have expenses. You will still pay taxes. You will still have things that are increasing that you will have to be paying out for the property. Depending on if you're in the city limits or not, you're going to have to mow it. You can't just leave it and let it sit. You've got to take care of it. I've got an investor, actually he's an investor who bought, and he was an investor 30 years ago, who bought land in East Austin. And he bought one 5-acre tract he bought at a sheriff's auction for $600. We're on the market for $1.4 million now. But the problem we're running into is, while we show the property, the city keeps trying to get onto us because it hadn't been mowed. So we've got the mowers going out there, and we got it mowed. And then last week, somebody drove over the fence into the property with a dump truck with a house worth full of damaged furniture, couches, beds, all sorts of stuff, and just dumped it in the back part of the land. It's $15,000 to clean that up. And if it's not cleaned up, he gets fined. And it affects the property now. We have to say that it's been used as a dump site. So set up game cams. I'll tell you, keep an eye on your property. Things are getting crazy out there. So there are expenses. If you buy and hold, eventually it will pay off. It is going to continue to rise in value. And when you're talking about buying land, be sure that your land buyers understand development costs that need to be factored in. It's not just the price that you pay up front for the land. You're going to have to do different, depending on if you're in the city limits, in the ETJ, or in the county, you're going to have to do all sorts of different kinds of studies, maybe a phase one. You're going to have to do tree surveys. You're going to have to do all these kinds of things with the city before you can even go to the city to get permitting to start to develop it. And then you've got to look at a square foot price for actually developing it, infrastructure, and building. So that land price is just the foundational, no pun intended, cost. And you've got everything on top of that, so that you can look at a project, and depending on the kind of project it is, you can expect from dirt up to be anywhere now from $350 to $375 per square foot for a finished building that you can lease. And you look at the price for just the land and you think, oh, that's not a bad price right now. What are you going to have to factor in to make that actually finished so that it is generating? Some are building out only shell space. We'll talk about that in a minute, and letting the tenant pay for the build out. That's killing tenants right now, because they don't have either they don't have the cash to do that, or it's taking so long for permitting. We will put someone in, they will sign a lease and start their build out, and it'll take them 9 months to a year to get the interior built out from shell space to fit, so that they can use the space for their business. And that becomes a strain on the landlord then too, because they have a signed lease, but they can't collect anything but the triple nets until they've got their certificate of occupancy and are in the building operating their business. So at that point, you have a landlord that may be sitting on an empty space for a year, even after you have a signed lease. So all of these kind of timetables that you need to know and to be aware of. Multifamily and hospitality, another segment. This is expensive. Multifamily, high demand. People want apartments. They want value add apartments. They want to be able to remodel them and raise the rents when people move out, when they're leasing to an end. But if you've got players who get their money, or players who are looking in this, there are quite a few available. Prices are rising. Cap rates are falling. What that means is you will not make as big a return on multifamily and hospitality. We're seeing, I think, 0.5%. So it's dropped a little bit. I saw one advertised yesterday for 3% cap rate. What you're hoping then is that you can remodel it, that leases will come to an end, and because rents are going up in the area, you can raise your rent, and that cap rate will rise as a result. Always, you have to concern yourself with repairs and updates. Now, if you see value add, if you go to LoopNet, go to Crexie, and it's a value add property, that means this thing needs to be fixed. There are things that need to be done to it to bring it up to market value, and you need to be aware of what that cost and what that timeline might take to get it up to that point. It is not a point. I had an investor ask me, can I just buy it? It was a sixplex in Copper Scope. Can I just buy the sixplex, and as everybody's leases come to an end, just raise the rates? You can, but if you don't fix the place up first, you can't justify that rate, and it's probably going to take you longer to get a tenant in there. So they actually went in, remodeled the whole thing, and were able to take it from about a 3.5% cap rate to a 7% cap rate just by making it look nice and doing the needed repairs. So value add means it needs to be fixed. The other difficulty that we're running into is that people are advertising value add properties, but the price that they're listing it at is not value add. It's as if it had already been remodeled. And they're basing that price on, here's what you will be able to eventually generate, so that's what we're going to sell it for. That's not rational. If you're going to charge what it's going to be able to generate later, then you've got a buyer who's going to be taking the risk of not knowing maybe what the cost is going to be to get it to that point and hope that it does generate that amount. So do your due diligence. The cost to update also includes material, time, not to mention labor cost and all the rest. Office, retail, restaurant. This segment is actually offering one of the better returns on the market. We're seeing higher rates for restaurants and for retail, a little bit lower for office, but still not bad. We're still able to see a 6 or 7% cap rate on office space around the Austin MSA. Typically, this is an immediate return. This is not something that you're going to have to fix up. Now, multifamily, hospitality, yes, it's already generating. Office space, retail space, this is going to be one of the better immediate returns because more than likely you are buying a space that already has a tenant there. Now, I had seen a discussion in a Facebook investor group page, and somebody was buying a property with a tenant, and the question was, can I kick my tenant out? They're not paying enough. What is the answer to that question? You remember this from your licensing classes. The lease runs with the property. That's what an estoppel certificate is. You have to let them know a new landlord is taking over the lease. So payments will be made to that new landlord beginning on such and such a date. It does not change the terms of the lease or anything else related to it. Now, you can renegotiate at the end of the term and tell your leasing clients this, tell your landlord clients this, so they know. You can always renegotiate that lease because most leases are written for the renewal to be at the then market rate. So that means go in and negotiate for your clients. I encourage you to do this for lead generation. Places you do business that you know are renting that space, talk to the manager, talk to the owner, and find out when their lease is up, if they need a bigger space, smaller space, or if they even know that they can renegotiate their lease when the term comes up. And offer your services because you can get paid on helping them renegotiate a new extension on that lease. So be aware of what you can do there. But office space, retail space, immediate return. I encourage investors to start small, buy 1 or 2 small properties. If they're not already generating, get somebody in. Had a client last year that bought 2 of these condo units side by side, both of them 800 square feet, used one for their office and leased the other one out. And what we could charge for lease for the one paid the mortgage for the 2 of them. They started that, got to doing that and thought, ooh, we like this, let's do more. So now I'm hunting for more. So if you see any condos that come for sale, let me know. I'm looking, and they come up every once in a while. When they do, they're not going to last long. So start small, 1 or 2 properties, and build your portfolio that way. You will probably pay at least 20% down with your lender. If you don't already have a list of commercial lenders, contact me. I'll send you that list, the ones that I know in town that we work with, because you're going to need to talk to a commercial lender, and you're going to need that lending approved in your feasibility period. And you've probably got 30 to 60 days to get that done if you're purchasing a commercial property, unless you've got an extended feasibility period. So you need to hit the ground running with your clients, just like you would a home buyer. They need to be pre-approved. What their budget is, what they can do, what kind of cash they've got, what kind of return they're looking at, so you know where to point them. Again, triple net leases cover the landlord expenses. Be sure and explain that. If you haven't noticed, gas stations are like Starbucks. There is one literally on every corner. Everybody's looking for a corner to put a gas station on. Other than land, and within the land category, I can build a gas station or find me a gas station that I can buy. Gas stations are like Starbucks. The funny thing is we did ask a client that I think they've got 12 or 13 gas stations. They're wanting to buy 3 more. And we asked them, with gas prices doing what they're doing, with everything that's going on, with all of that part of the economy right now, how is the convenience store gas station business? And they said it's better than ever. So don't think that high gas prices mean it's bad. It's true that a lot of that is taxes, a lot of that is the cost of doing business, but everybody's wanting to build a gas station. Rental rates range, office retail, depending on where you're looking at, what part of town and where it's at. They can range anywhere from $12 a square foot a year all the way up to $40 or $50 a square foot per year. So if somebody asks you what's the range for rent for this kind of property, it depends. It depends on what kind of property, how new or old it is, how long the lease is going to be, and what part of town you're in. If you can imagine, on one part of town, you could rent an office space for $1 a square foot a month. Another one, it's going to cost you 4 times, 5 times that, just depending on where it's at. You also need to coach your clients to know, and your landlords to know, you will pay more per square foot for a smaller space than you will for a larger space. The smaller the space, the more per square foot you will pay. That's just the way the math works. That's the way it falls out. Industrial warehouse, Matthew, you recognize that? You recognize that picture there. Industrial warehouse space is also in high demand. These data centers are building big warehouse space, big open floor plan spaces. It's in high demand because of the type businesses that are moving here. So any kind of a support industry to the new businesses coming are going to be looking for flex warehouse space. The most popular that we're seeing, and a lot of them are under construction right now, not so many of them are vacant. We're waiting on them to be finished out. I know one developer that just does this kind of space. It's a smaller space where you've got several units, kind of like condos, but it's flex warehouse space. So you have 900 or 1,000 square foot office in the front and the same in the back that is warehouse, air conditioned or not, depending on the use and where it's at. And these, as these are being built, a lot of these going up the toll road, up into Pflugerville, Star Ranch, these are being built in Liberty Hill. As these pop up, they are selling before they are even finished, either for people to use for their business or to lease out for businesses as well. And again, that's usually under the 2,000 square foot. So it's going to be high demand space. As soon as it's done, it's probably not going to be difficult to lease it. Had 2 agents yesterday that I was talking to, both of them having difficulty finding flex space for their clients that will work, that's in a location where they need to be. So again, you need to be searching LoopNet, knowing that if you're not a paid subscriber to LoopNet, you're only seeing 20% of their listings at any given time. So do a new search on LoopNet for properties every day. I break it down into areas and do searches for multiple types of properties. You can narrow it down so I can just keep a list, keep a spreadsheet to send out to my investors. LoopNet, Crexi, even more so, use Crexi. They show you all of the listings. If it's on there, it's going to show. The difficulty with Crexi is that a lot of people listing on Crexi, because they know everything's going to be out there, everybody's going to see it, they don't list prices. They just put the property and it says unpriced. So don't feel bad about picking up the phone or sending them a message to find out what the pricing is. You will call some of these agents and they will never call you back. They just like to collect listings. They really don't want tenants. So keep after it. Again, biggest complaint about commercial realtors, they don't pick up the phone, they don't call you back. Persist, keep after them until you get an answer. But you need to know what's happening in the different areas of town, in these different segments, so that you're aware and you then can begin to see and to track trends. So it'll come up in conversation. What can I expect to pay for this kind of property in this part of town? You'll know that off the top of your head because you've spent time watching the trends. And you don't even have to do this every day. I would say if you did this just once a week, finish out your week just looking, where's everything this week? Do it like you would do a CMA. Let's go in and let's look at warehouse. Let's look at land. Let's look at retail. And just look at a few areas. LoopNet and Crexi both let you set the boundaries, and you can see and you can generate averages. Location is important for flex space. They need to be near main roads. Had one last month that's looking for a space, and it has to be near a railroad spur because they're going to need to run a train line into the back of their warehouse. That one is fun. We're still looking. But location is key there for transportation. The things you also need to know before you start looking: how high does the ceiling need to be? You don't want to find a space and then find out they need 20. Most spaces won't have that. So you need to know that. So you add that to your criteria. You need to know what kind of doors and what kind of docks they need. Do they need a roll-up door? Do they need ground level? Do they need a dock high? What kind of access do they need for what they're going to be using the flex space for? When we look at build out time and at cost, this is a picture of 7,500 square foot. There it is, 7,500 square foot shell space in Georgetown, just outside of Sun City. Investor bought this, didn't build, and it's still sitting just like that. What I recommend investors do is, if you're going to buy a space this size, at least put some walls in there to break it up into 3 or 4 smaller spaces. Because the goal here is to have 7 1,100 square foot spaces. The investor thought, though, and by the way, this is not my listing, but the investor thought if we just leave it wide open, somebody could take bigger space. But somebody comes in, looks at that, and they're overwhelmed by that because they're doing their math in the head. What is it going to cost to build that out? I don't need that much space. Oh, no. And then it's just like you're showing a house that's not staged. It's difficult for people to visualize. What does that space look like? So if you've got a space like this, you need to know how far apart are the studs placed? How far apart are the doors spaced? So you can go in and understand yourself. Here's 1,000 square feet. Here's 2,000 square feet, so that you can look in a space like this and point them in the direction they need to go for determining how much they need to use. Down payments on commercial property right now for lenders, it's going to be 20% minimum, 30% for land. We had a deal, in fact, somebody financing land for a church, and churches now, banks are requiring 40% down. So depending on the type of business that it is and what kind of budget it has, will depend on what the banks will do. For a church, for instance, a bank will look at the annual budget for the church, and they will lend them 2.5 times that annual budget if they put 40% down. And so that's just how the math works. So as you meet and talk to lenders, find out what the specifics are on each of these, because each of these segments is different as to what the interest rate will be, as to what the down payment requirement will be, and as to how much the banks are willing to lend. Commercial lending, it will be financed on a 25-year amortized note, but it's only a 5-year note. So your payments would be as if it was a 25-year mortgage, and it'll be paid for 5 years, and you have a balloon at the end that you then refinance. That allows you usually to lock in an interest rate on a commercial loan for 5 years only. Some places will do a 7 to 10 year, but it's probably not going to be locked for that whole term. It'll get flexible at some point. But you'll do a 5-year with a refinance at a new rate for, again, another 25-year amortized on a 5-year note. And you also need to take into account tenant improvement allowance. On a space like this, where it's pure shell space, then your tenant is going to need to know that they are going to have to pay out of pocket to do the build out. They can get loans for that, by the way, but they have to pay out of pocket to do the build out. And then once it's approved and they have their permits all done, everything's approved, the work's finished, and they have their certificate of occupancy, then when they open for business, the landlord will reimburse them an amount per square foot toward that build out cost. The highest I've seen was $50 a square foot. That was huge. The average is 30 to 40 a square foot on a space like this. The difficulty, by the way, is if you have a space that's already finished out, but you have to remove some walls or change some things for the tenant, you've got to remodel it before they can move in. If they've done a shell space before, then they're going to want $40 a square foot toward their build out, because that'll be about 40%, maybe 50% of their build out cost. The landlord won't do that on an existing space. They'll do $10 or $15, maybe $20 a square foot. So you need to have those conversations as well. That is negotiable, but understand that tenant is going to have to pay up front and get reimbursed for that. So not only are they putting deposits down and moving their business, they're going to be paying substantially to fit the space for their need. If they've done it before, they're going to know this. If they're new business or looking for new space, you need to coach them so that they don't get blindsided by unexpected cost. Some will do a build to suit, where they will actually build it out for you and then charge you the final price, and that's that. If you can find something to do a build to suit, that's fantastic. If not, you'll have to negotiate that TI, that tenant improvement allowance. Keep in mind, permitting with the city takes time, delays, shipping, materials, labor, all of that is still continuing to be part of the equation. I want to finish then before we do questions with, I always want to talk about commercial lead generation. Your number one lead generator in commercial is your sign in front of a property, for sale or for lease. Put this in front of a space, so 1,260 square foot space on 3 acres on Highway 29, just before you get to 183 in Liberty Hill, for lease.
That's every day.
I got more. They took it down yesterday. I'm sad that I leased it out and they took my sign down, because I got more calls off that sign at that location than any other lead generation source for the last month. People just, it's right there. It's a great location. And of course, everybody's calling and they want to, can we get used to the low ballers? That's okay. But your number one lead generation, residential or commercial, is your sign in a yard. And if you can get multiple signs in multiple locations, do it. My next sign that's going up next week that I'm excited about, if you know where Crystal Falls dead ends into Toronto, listed for sale, $7.5 million listing. My sign's going to be right there. When you stop at that intersection, ta-da, Way Realty Group. I'm expecting calls, and then I'm going to give people the price, and they're going to hang up. No, it's there. Get your signs out. Now, if you're not listing yet, if you're still just helping buyers or tenants, that's still fantastic. Here's how you lead generate. Who do you know who has a job? If somebody has a job, they're working for somebody that's renting or own a space. They're going to need upsize, downsize. They may want multiple locations. They may have lease renewals that we've talked about. And also, another powerful lead generator for commercial, ask for business where you do business. Don't just pay at the pump. Go in and talk to them. Go in and talk to people behind the counter. A lot of times that's going to be the manager or maybe even sometimes the owner, and ask them, are they looking for other locations? If you could provide them a source for land or for other opportunities, would they be willing to talk to you? You will find out that that is an immediate conversation starter, and they will be immediately interested that you came in and asked how you can help them with their business. Since we know gas stations are in demand, I promise you, if somebody owns one, they're going to want to own more. So go into convenience stores, wherever you do business, talk to people about their business and what their business needs might be. And then the good news is you can either work it with a KW commercial agent here out of our market center and learn how to do commercial, or you can refer it, and either way you get paid. Been able to show several of our residential agents here how to generate a second income stream just off of commercial referrals, just by uncovering business. So even if you have no interest in commercial at all, if you can uncover the business, we've got agents here that'll take your referrals and work it, take care of them, and you get paid. Understand, commercial is a longer sales cycle. It will take longer to get the deals done, but they're usually larger deals as well. So your 25% referral fee on a commercial deal could end up being absolutely fantastic. So feel free to ask questions to let us know how we can help you figure out how to serve commercial clients. And of course, if you're wanting to learn commercial, we're all for coaching and doing that. I'll be doing these classes, by the way. I missed last month due to my unexpected eye surgery, but we'll be doing these classes first Wednesday of every month for the rest of the year on different topics. It'll be live streamed and recorded so that you've got it. If you can't make a class, you can watch the live stream and see that there. But always, if you have questions, feel free to text me, email me, and I'll get back to you as soon as I can.
The recordings will be on the YouTube channel?
Yes, recordings will be on the YouTube channel for Way Realty Group. And I've got one for residential lead generation and prospecting there, and also now this one, and all of our commercial ones moving forward will be on here too. So any questions?
I have a question.
Yes.
We discussed last night. So on the warehouse, which I'm working on right now, what is on a warehouse lease? What of all the different types of commercial leases is the triple N the number one if it's a single
Warehouse?
No, it's not a national brand. It's a single warehouse.
Warehouse may not be a triple net lease.
Okay.
And that the different kinds of leases there, you have a gross lease, which is just, this is the amount you pay per month, period. That's it, you're done.
Okay.
And the landlord pays taxes, utilities, and everything. A modified gross means that you pay, as the tenant, you will pay rent, and part of your rent will cover taxes and a couple of other things. But all you have to pay above that is utilities.
Okay.
A triple net lease means you're paying all of the landlord's expenses, or it may be partial. just depending on how many tenants there are in a space.
So in the warehouse, since this is a single standalone building, the key will alone will occupy, do you see that more probably in interest?
How big is it?
It's gonna be right at 4,000 square feet.
4,000 square feet? That will probably be a triple net at that size for a warehouse. But just, you can always just ask, and they'll give you a breakdown if he'll call you back. Yes. Just ask if it's a modified gross or triple net lease, and if it is triple net, ask him the amount, and they'll give you, usually, by the way, that's the difference too. Commercial will give you an amount for the triple net per square foot. That is per square foot per year. So you take that amount, that dollar amount, multiply it by the square feet, divided by 12 for your monthly, what you're going to be paying for rent. So, yes.
Do you see like, seem like there's opportunity for commercial to transition to like residential housing with the office spaces and stuff, that the available office spaces that are vacant, right? So they would
Yes.
be back to capacity for several years. Do you
Right.
see like some of those like transition into residential somehow?
It keeps going back and forth.
Yeah.
When COVID hit and put it in commercial space years, where it swung from residential to commercial and then back, and now it's so like every 2 years it kind of.
I was thinking more in terms of like huge office buildings that are vacant, becoming like condos or something.
Yes,
Yeah.
that absolutely.
All right.
Yeah, Austin's looking at that right now.
Yep. They have to do zoning changes, and they're looking to do that so they don't just have to build it from the ground up.
Yeah.
And that's the point. Then they'll usually go to a mixed use zoning first, put restaurants, retail downstairs, and do residential as they go up. Keep in mind too, if you're looking at properties in Austin proper, always check, because now it's a deal where you can have a property and you can't expand on the property unless you go up. But that offers you, depending on the zoning, commercial or residential uses for multiple stories, and you can actually build. There's builders who are going to build over the property that's already there and go up for expanding. So if you know somebody's a property owner downtown Austin, and you can identify a neighborhood that will allow that, then you can convince them to build and lease. They can still live there if they want to, but yeah, all sorts of opportunities to look up. So.
Can I get, from someone, I don't think this exists in our docs, but can I get a commercial lease filled out template?
Yes, email me and I can send that to you. It is through, if you've got DocuSign or .loop, you just have to search the TXR. You have to search for commercial docs.
I've got that, or you downloaded that, studied it, but
Okay.
I would love to see a template filled out.
Yeah, but there are, and that's for the commercial docs, unimproved and improved property. And then you've got leases, you've got the lease application. All of that is promulgated so that you can fill it out, but they're long and complicated. So yeah.
I need a little coaching
Yes.
to that point.
Absolutely.
Maybe some help.
Yep. All right.
For sure.
Well, if that's it, thank you so much for your time today.
That was amazing.
And if you want a copy of the PowerPoint, let me know. And of course, the link's here if you want to go back and listen
I do
again.
want a copy of the PowerPoint.
So I'll send that to you. So, all right. Thank you.
Excellent. Bye.
Should-